All right, so are you ready to make some money? Let's talk Warren Buffett, specifically where he's putting his money to work right now.
Sounds like a plan.
We're diving deep,
Yeah.
into this Motley Fool article. The best Warren Buffett stocks to buy with $1,000 right now. Fresh from December 31st, 2024.
Okay.
And get this, one of these companies is trading at a single-digit multiple of expected 2025 earnings. I mean, that's pretty enticing, right? So what's the catch?
Well, keep in mind, this isn't like some secret list of hidden gems.
Right.
These are all companies Buffett already owns through Berkshire Hathaway.
Okay.
The author, Matt Frankel, is basically highlighting 5 that he thinks are particularly well-positioned for growth right now.
So like his top picks from what Buffett already has.
Yeah, exactly. Like the cream of the crop.
Okay, well, let's hear him. What's the first one?
Okay, so first up is Bank of America.
Oh, classic Buffett.
Yeah, right. He loves his banks. But it's interesting because Bank of America is actually poised to benefit from a lot of the changes happening in the financial landscape right now.
Like what?
Well, think about it. There are whispers of lower interest rates, the new administration's stance on loosening regulations, and even the possibility of, the sweet corporate tax breaks.
Oh, yeah, those would be nice.
Right.
So it's not just riding the general economy wave.
Yeah.
There are some specific things that could really work in their favor.
Exactly. Now, the second pick, Ally Financial, this one's a bit more of a puzzle.
Okay.
They're an auto lender, and they've taken a bit of a hit lately with rising charge-offs, meaning more borrowers are defaulting on their loans.
Oh, that sounds a little scary.
Yeah, it's a bit of a red flag.
Right.
But the article also said they're making 10.5% on their average new auto loan.
I mean, is that good? Even I know that sounds pretty good.
It's definitely high yield, which is why it's so interesting that they're currently trading at a 12% discount to their book value. That kind of discrepancy makes you wonder if the market's overreacting to those charge-offs.
So it can be a good opportunity if they can get those defaults under control.
Exactly. It all comes down to their net interest margin, the difference between what they earn on loans and what they pay out on deposits.
Right, right.
The article suggests they could add almost a full percentage point to that margin, which would be significant.
Yeah, interesting. What about pick number 3?
All right, next we've got Amazon.
Shocker. I mean, not really a shocker that Buffett's bullish on Amazon. Is there anything particularly noteworthy about this pick, though?
Well, what's intriguing here is how much more profitable Amazon has become under their new CEO, Andy Jassy. He's been streamlining operations and really focusing on efficiency.
And this is all while e-commerce is still only, 16% of all U.S. retail sales? I read that in the article.
Yeah, you're right. So there's still room for growth, even for a giant like Amazon.
Yeah, that's wild. Okay, so lots of potential there. What's next?
Plus, their cloud computing division, Amazon Web Services, is just dominating. And that market is projected to triple in size by 2032.
Jeez. Okay, on to the next one. What else is Buffett liking?
Okay, now for the pick that I was not expecting at all, SiriusXM Holdings, the satellite radio company.
Oh, wow. Yeah, that one feels a little out of left field for Buffett.
It does, doesn't it?
Yeah.
But when you look closer, it starts to make sense. They practically have a monopoly in their industry. Their revenue is mostly recurring from those subscriptions. And remember that single-digit earnings multiple we talked about?
Mm-hmm.
Yeah, SiriusXM is trading at that level.
So it ticks a lot of Buffett's boxes.
Mm-hmm.
High barrier to entry, stable income, and potentially undervalued.
Right. Now, the last pick might be the most intriguing of all. Berkshire Hathaway itself.
Wait, investing in Berkshire Hathaway itself? That's like meta investing or something.
I know, right? It does feel a bit like that.
Yeah.
But the article makes the case that it's like buying a diverse slice of all these great businesses, plus you get their massive cash reserves to boot.
And that cash hoard is nothing to sneeze at. Didn't the article say like $325 billion or something?
Yeah, something crazy like that.
So essentially you're betting on Buffett and his team's ability to allocate capital effectively.
Right, and their track record speaks for itself. However, there is one big question hanging over this pick.
Oh, let me guess what happens when Buffett's not around anymore. He's got to be getting up there in age.
Exactly. He's 94. Now, they do have a succession plan, but that's a risk that any investor in Berkshire Hathaway has to consider.
Yeah, for sure. So, okay, we've got these 5 picks, all with some serious potential, but also some things to consider before jumping in. Before we analyze each one in more detail, I think it would be helpful to step back and talk a bit about Warren Buffett's investment philosophy.
Yeah, that's a good idea.
What are the core principles that guide his decisions?
Well, one thing that sets Buffett apart is his long-term focus. He's not interested in quick flips or chasing trends. He looks for companies that are built to last, that have what he calls a durable competitive advantage.
So not just a hot stock that's going to spike for a few months, but something that can weather economic storms and come out stronger on the other side.
Exactly. He often talks about the importance of moats, which are essentially barriers that protect a company from competition.
Okay.
Things like strong brand recognition, a loyal customer base, or a unique product or service.
Like how Apple has that die-hard fan base that's always going to buy the next iPhone no matter what.
Precisely. That's a perfect example of a moat. Buffett also emphasizes the importance of strong management teams that are competent, ethical, and aligned with shareholder interests.
So he's not just looking at numbers on a spreadsheet. He's looking at the people running the company, their track record, their values.
Absolutely. And of course, he pays close attention to a company's financials, looking for consistent profitability, strong cash flow, and a healthy balance sheet. But it's not just about the numbers. It's about understanding the underlying business, its growth potential, and its ability to generate value over the long term.
Right. Okay, I'm starting to see how all these principles tie together. So how do these 5 picks stack up against Buffett's philosophy? Let's start with Bank of America.
Well, as we discussed, Bank of America is well positioned to benefit from the current economic and regulatory landscape. Lower interest rates could spur lending activity, while deregulation could reduce costs and boost profits.
Right, and if those corporate tax breaks materialize, that would be another major win for them. But what about their competitive advantage? How does Bank of America stand out from the crowd?
They have a vast network of branches and ATMs, a strong brand reputation, and a diversified business model that spans consumer banking, investment banking, and wealth management. They're also a leader in digital banking, which is crucial in today's tech-driven world.
So they're not just an old-school bank clinging to the past. They're adapting to the changing times and embracing new technologies.
Exactly. And that's crucial for any company, especially in an industry as dynamic as finance.
All right, let's move on to Ally Financial. What's their story? They seem to have some challenges, but also some intriguing potential.
Right. The biggest challenge they face is those rising charge-offs, which, as we discussed, can cut into profits. But they also have some key strengths.
Like that juicy 10.5% yield on new auto loans.
Exactly. And their focus on digital banking gives them a cost advantage over traditional brick-and-mortar banks.
Plus, if they can get those charge-offs under control and widen their net interest margin, as the article suggests, they could be sitting pretty.
It's all about execution. Can they deliver on those promises? That's the million-dollar question.
Okay, let's talk Amazon. It seems like everyone and their grandmother is investing in Amazon these days. Is there still room for significant growth?
Well, their stock has had an incredible run over the past decade, but I wouldn't count them out just yet. Remember, e-commerce is still only a fraction of total retail sales, and Amazon is constantly expanding into new markets and product categories.
Plus, they have that juggernaut cloud computing business, Amazon Web Services. It feels like AWS is practically running the internet at this point.
It's pretty close. And their dominance in cloud computing gives them a huge advantage in areas like artificial intelligence and machine learning, which are expected to be major growth drivers in the coming years.
But what about the competition? Aren't other tech giants like Microsoft and Google trying to muscle in on Amazon's turf?
They are, and competition is heating up. But AWS still has a significant lead in market share, and they have a reputation for being incredibly innovative and customer-focused.
So it's a battle of the titans, but Amazon is holding its own.
Okay.
Okay, now for the dark horse. SiriusXM Holdings. I'm still scratching my head over this one. What does Buffett see in this satellite radio company that everyone else seems to be missing?
Well, he's clearly drawn to their near monopoly in the satellite radio market. That gives them incredible pricing power and a loyal subscriber base. And despite the rise of streaming services, SiriusXM has managed to hold on to its subscribers pretty well. In fact, their churn rate, which is the percentage of subscribers who cancel their service, is actually quite low.
Interesting. So even with Spotify and Apple Music breathing down their neck, people are still willing to pay for satellite radio.
It seems so. They've carved out a niche for themselves, focusing on exclusive content like live sports talk radio and personalized music channels.
Okay, so they're not just trying to compete head-on with streaming services. They're offering something different, something that caters to a specific audience.
Right. And remember, their revenue is mostly recurring from subscriptions. That kind of predictable income stream is very appealing to investors, especially in uncertain economic times.
Makes sense. Stable cash flow is always a good thing. But what about their growth potential? Is there much room for expansion in the satellite radio market?
That's a good question. The market is fairly mature, so explosive growth is unlikely. But they're looking for ways to expand, including partnerships with automakers to offer SiriusXM in new cars, and partnerships with streaming services to reach a wider audience.
So they're exploring different avenues to stay relevant and attract new customers. Okay, now for the final pick, and perhaps the most intriguing one, Berkshire Hathaway itself. It's almost like Buffett is saying, hey, if you believe me, just invest in my company directly.
It does feel that way, doesn't it? And
Well,
to be fair, his track record speaks for itself. But as we've discussed, the elephant in the room is succession. What happens when Buffett is no longer at the helm?
right. They have a plan in place, but it's impossible to know for sure how things will play out.
Exactly. And that's the big risk investors have to weigh. Are they willing to bet on the company's ability to continue thriving without Buffett's guidance?
It's a tough call. On the one hand, you have Buffett's incredible track record and their massive cash reserves. On the other hand, you have the uncertainty of the post-Buffett era.
It really comes down to your individual risk tolerance and your investment goals. If you're looking for a safe, steady bet, Berkshire Hathaway might not be the right choice. But if you're willing to take on a bit more risk for the potential of long-term gains, it could be an interesting option.
Okay, I think we've laid a solid foundation for understanding these 5 Warren Buffett picks. Now let's dive deeper into each one, analyzing their financials, their growth prospects, and their potential risks.
Sounds good to me. Where should we start?
Let's start with Bank of America.
Okay, let's take a look at their balance sheet. So Bank of America, they're sitting on a pretty impressive deposit base,
Okay.
which gives them a lot of firepower for lending.
Uh-huh.
And with those whispers of lower interest rates, they could see a real surge in loan demand.
Yeah, that makes sense. Lower rates usually mean more people and businesses are looking to borrow money, right?
Sure.
But what about the competition? Aren't there like a ton of other banks out there all vying for those same customers?
Oh, of course, competition is fierce in the banking industry. But Bank of America has a few advantages,
Like what?
Well, their massive branch network still matters to a lot of customers who prefer that face-to-face banking.
Yeah, I can see that.
Plus, their digital platform is top-notch. They've really invested in making their mobile app and online banking user-friendly and feature-rich.
So they're covering all their bases, appealing to both the tech-savvy and the more traditional customer. But their stock performance hasn't been like stellar lately. What's been holding them back?
Well, there's always that fear of an economic downturn.
Right.
When the economy slows down, people tend to default on their loans, which can hurt banks' bottom lines.
That makes sense.
That's why those potential corporate tax breaks are so intriguing. If those come through, it could provide a nice cushion for Bank of America's earnings, even if the economy takes a hit.
Okay, that makes me feel a little better. So overall, it seems like Bank of America is a solid, well-established company with some potential tailwinds in the near future. Not exactly a moonshot, but maybe a steady climber.
Yeah, that's a good way to put it. Now, Ally Financial, they're a different story. Higher risk, higher potential reward. Those high charge-offs we talked about are definitely a concern. But the article pointed out that Ally is taking steps to tighten its lending standards and improve its underwriting process.
Oh, so they're not just sitting back and hoping for the best. They're actually trying to mitigate those risks.
Right. And if they can successfully reduce those defaults, their profitability could really take off. Remember, they're already making 10.5% on their average new auto loan, which is significantly higher than most banks.
True, true. But even if they get those charge-offs under control, isn't the auto loan market pretty cyclical? What happens if people just stop buying cars?
That's always a possibility, especially with the rise of ride-sharing services and the shift towards electric vehicles, which tend to last longer.
Right.
But Ally is diversifying beyond auto loans. They're expanding into areas like personal loans, mortgages, and even online banking.
So they're not putting all their eggs in one basket. That's smart.
It is. It reduces their reliance on any single market and gives them more options for growth.
Okay, let's shift gears to Amazon. It seems like everyone and their grandmother is investing in Amazon these days. Is there still room for significant growth?
Well, their stock has had an incredible run over the past decade, but I wouldn't count them out just yet. Remember, e-commerce is still only a fraction of total retail sales, and Amazon is constantly expanding into new markets and product categories.
Plus, they have that juggernaut cloud computing business, Amazon Web Services. Feels like AWS is practically running the internet at this point.
It's pretty close. And their dominance in cloud computing gives them a huge advantage in areas like artificial intelligence and machine learning, which are expected to be major growth drivers in the coming years.
But what about the competition? Aren't other tech giants like Microsoft and Google trying to muscle in on Amazon's turf?
They are, and competition is heating up. But AWS still has a significant lead in market share, and they have a reputation for being incredibly innovative and customer-focused.
So it's a battle of the titans, but Amazon is holding its own. Okay, now for the dark horse. SiriusXM Holdings. I'm still scratching my head over this one. What does Buffett see in this satellite radio company that everyone else seems to be missing?
Well, he's clearly drawn to their near monopoly in the satellite radio market. That gives them incredible pricing power and a loyal subscriber base. And despite the rise of streaming services, SiriusXM has managed to hold on to its subscribers pretty well. In fact, their churn rate, which is the percentage of subscribers who cancel their service, is actually quite low.
Interesting. So even with Spotify and Apple Music breathing down their neck, people are still willing to pay for satellite radio.
It seems so. They've carved out a niche for themselves, focusing on exclusive content like live sports talk radio and personalized music channels.
Okay, so they're not just trying to compete head-on with streaming services. They're offering something different, something that caters to a specific audience.
Right. And remember, their revenue is mostly recurring from subscriptions. That kind of predictable income stream is very appealing to investors, especially in uncertain economic times.
Makes sense. Stable cash flow is always a good thing. But what about their growth potential? Is there much room for expansion in the satellite radio market?
That's a good question. The market is fairly mature, so explosive growth is unlikely. But they're looking for ways to expand, including partnerships with automakers to offer SiriusXM in new cars, and partnerships with streaming services to reach a wider audience.
So they're exploring different avenues to stay relevant and attract new customers. Okay, now for the final pick, and perhaps the most intriguing one. Berkshire Hathaway itself. It's almost like Buffett is saying, hey, if you believe in me, just invest in my company directly.
It does feel that way, doesn't it?
Yeah.
And to be fair, his track record speaks for itself. But as we've discussed, the elephant in the room is succession. What happens when Buffett is no longer at the helm?
Right, they have a plan in place, but it's impossible to know for sure how things will play out.
Exactly. And that's the big risk investors have to weigh. Are they willing to bet on the company's ability to continue thriving without Buffett's guidance?
It's a tough call. On the one hand, you have Buffett's incredible track record and their massive cash reserves. On the other hand, you have the uncertainty of the post-Buffett era.
It really comes down to your individual risk tolerance and your investment goals. If you're looking for a safe, steady bet, Berkshire Hathaway might not be the right choice. But if you're willing to take on a bit more risk for the potential of long-term gains, it could be an interesting option.
Okay, I think we've covered all the bases with these 5 Warren Buffett picks. We've analyzed their strengths, their weaknesses, their growth potential, and their risks. But there's one more topic I want to touch on before we wrap up. ESG.
ESG. You mean environmental, social, and governance factors.
Exactly. It seems like everyone is talking about ESG these days. How does Buffett approach these issues? Does he even care about things like sustainability and social impact?
That's a great question. And to be honest, Buffett's stance on ESG has been a bit of a mixed bag. Well, he's made statements in the past that suggest he's not a big fan of the ESG movement. He's argued that companies should focus on maximizing profits for their shareholders, not on pursuing social or political agendas.
So he's a bit of a traditionalist when it comes to investing.
You could say that, but at the same time, he's invested in companies that are considered ESG leaders, like Apple and BYD, the Chinese electric vehicle manufacturer.
So his actions don't always align with his words.
It seems that way. It's possible that he sees the long-term value in investing in companies that are addressing ESG issues. After all, companies that ignore these issues could face reputational damage, regulatory scrutiny, and even financial losses in the future.
So even if he's not an ESG evangelist, he's not blind to the importance of these factors.
Right. And it's worth noting that Berkshire Hathaway has started to incorporate ESG factors into its investment process.
Oh, really? Tell me more.
They've created a new position, the head of sustainable investing, and they've committed to reporting on their ESG performance.
So they're taking concrete steps to align themselves with the growing focus on ESG. But what about these 5 picks specifically? How do they stack up in terms of their ESG performance?
Well, it's a mixed bag. Some of these companies like Apple and BYD are considered ESG leaders.
Apple with its focus on renewable energy and BYD with its electric vehicles. That makes sense.
Right. But others, like Bank of America and Ally Financial, have faced criticism for their environmental and social practices.
Oh, what kind of criticism?
Well, Bank of America has been criticized for its financing of fossil fuel projects, and Ally Financial has been called out for its lending practices in low-income communities.
So there are some potential red flags for ESG-conscious investors.
There are. It's important to do your own research and evaluate each company based on your own ESG criteria.
Okay. I'm definitely feeling more informed about how ESG factors into Buffett's investment strategy and how these 5 picks align with those principles. But before we wrap up our deep dive into these stocks, there's one more question I'm pondering.
I'm all ears.
It's true, though. It can be tough to, block all that out, you know?
Oh, yeah, absolutely. But that's where having a solid investment philosophy really comes in handy. It's like having a compass to guide you when the seas get rough.
Yeah, I like that analogy. So even if these 5 Warren Buffett picks aren't the perfect fit for every listener, I hope this deep dive has given them some valuable insights, into his approach, his thinking, and the types of companies he's drawn to.
Right. Think of it as a masterclass in value investing. You've gotten a glimpse into how Buffett analyzes companies, what he looks for, and how he weighs the risks and the potential rewards.
Now, I know we've thrown a lot of information at you today. Bank of America Ally, Financials Amazon, SiriusXM Holdings, and even Berkshire Hathaway itself. Where do you even start if you want to learn more about these companies?
Well, the beauty of public companies is that there's a wealth of information available to anyone who's willing to look. Start with their websites, read their annual reports, check out their investor presentations.
And don't forget about those independent research reports. Websites like Morningstar and Seeking Alpha can be like gold mines of information and analysis.
Exactly. And if you're feeling really ambitious, you can even listen to the company's earnings calls where they discuss their financial performance and answer questions from analysts.
Wow, that's like next level investing. Yeah. But I love that idea that anyone can access this information and make their own informed decisions. It's empowering.
It is. And remember, you don't have to be a financial expert to be a successful investor. The key is to be curious, to be skeptical, and to always be learning.
So as we wrap up our deep dive into these 5 Warren Buffett picks, I want to leave you with a challenge. Don't just take our word for it. Go out there to do your own research and decide for yourself whether these companies align with your investment goals and your risk tolerance.
And remember, investing isn't just about making money. It's about supporting the companies and the causes that you believe in. So make sure your investments reflect your values.
Beautifully said. Well, I think we've reached the end of our deep dive. It's been a pleasure exploring these fascinating companies and the brilliant mind of Warren Buffett with you.
The pleasure was all mine. Always a delight to dive deep into the world of investing with you.
Until next time, happy investing, everyone.